Good morning this Wednesday, the 3rd of April. I'm Grady Wolf, market analyst with Bell Direct. Wall Street closed lower for a second straight session, extending on the negative start to the second quarter as bond yields rose and the release of latest economic data dented investor expectations of an interest rate cut out of the Fed in June. The Dow Jones lost 1%, the S&P 500 fell 0.72%, and that tech-heavy Nasdaq declined 0.95% on Tuesday. Inflationary pressures are climbing from manufacturing data coming in stronger than expected for March, and the price of oil has risen to a 5-month high. Key economic data out in the US overnight indicated job openings rose by 8,000 in February from January, which was hotter than the market was expecting, while factory orders in the US rose 1.4% in February from a 3.8% decline in January, which was also above market expectations. These two key pieces of data indicate inflation in the region may be stickier for longer than expected. In Europe overnight, stocks closed lower across the region as major markets opened for the first time in April after the Easter long weekend. The Stoxx 600 fell 0.76%, weighed down by retail stocks falling 2.1%. Germany's DAX lost 1.13%, the French CAC fell 0.92%, and in the UK, the FTSE 100 ended the day down 0.22%. Across the Asia markets on Tuesday, regions closed mixed as investors assessed the release of key economic data out of South Korea and Australia. Hong Kong's Hang Seng rose 2.18% on Tuesday, while China's CSI 300 index fell 0.42%, and South Korea's Kospi index added 0.2%, following the release of key inflation data out in the region, indicating inflation remains steady at 3.1% for March. The local market started the holiday-shortened trading week in the red, with the ASX 200 ending the session down 0.11% after touching a record high mid-session as losses among healthcare, industrials, telecom and REIT stocks offset gains among the miners and materials stocks in afternoon trade. The retreat from the mid-session record high was on the back of sluggish session on Wall Street on Monday after hotter than expected manufacturing data released in the US curbed expectations of a rate cut out of the Fed in the very near future. Online luxury retailer Cettire fell over 14% yesterday after Bell Potter downgraded the stock to a hold rating from a buy, while Austral soared 10.5% after confirming it had received a takeover offer. Healthcare star Mesoblast soared a further 71% on Tuesday, adding to the 217% rise over the last month in the aftermath of the US FDA approving the company's Phase 3 clinical trial data for BLA submission last week. Uranium producer Paladin Energy jumped 4.74% yesterday after the company announced it has achieved the milestone of first production at its Langer Heinrich mine in Namibia. Production guidance is now expected out of the company before July, given production is now underway. The price of gold also hit a fresh record high on Monday, following the release of fresh US inflation data. The gold price rally in recent times is due to many factors though, including global central banks like China buying up bullion, rising geopolitical tensions and a weaker US dollar. On the commodities front this morning, oil is trading 1.33% higher at $85 a barrel. Uranium is up 4.12% at $88.50 a pound. Gold is up 0.66% at $2,265 an ounce, and iron ore is trading 0.5% higher at $102.5 a ton. One Aussie dollar is buying 65.1 US cents, 98.74 Japanese yen, 51.81 British pence, and 1 New Zealand dollar and 9 cents. Ahead of the midweek trading session here in Australia, the SPI futures are expecting the ASX to open the day down 0.38%, tracking turbulence on global markets overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the rating on Paladin Energy from a speculative buy rating to a strong buy rating, and have increased the 12-month price target on the uranium miner from $1.60 to $1.65, following the first uranium production drums being filled with uranium concentrate at the company's restarted Langer Heinrich Mine in line with the March quarter guidance. According to the analyst, a line of sight to first revenue and cash flow removes the need for the speculative rating on the uranium producer. And Trading Central has identified a bullish signal on next-gen energy following the formation of a pattern over a period of 40 days, which is roughly the same amount of time the share price may rise from the close of $12.99 to the range of $14.60 to $15.10, according to standard principles of technical analysis. And that's all we have time for this Wednesday. Have a wonderful day, and as always, happy investing.